Welcome back for session 3, everyone, and this is a really big session, and I hope you get as much enjoyment out of it as Jackson got putting it together. He was very excited by the calibre of the companies that are about to come up on stage and address us. And they're going to be talking gold, aren't you, lads and girls? Yes, they're very excited. I haven't actually left the room for lunch today because everyone was so excited and they've all put a lot of effort into their presentations, especially our first speaker today, Nicholas Frappell, who's going to come up and join us. And I'm going to guess that many of you would have already met Nicholas at some point during the last 24 hours, and you'd have gone and held his gold bar, which is worth how much, Nicholas? 1.4 million, is it worth more? $1.4 million. So if you want to go and get a really impressive selfie of yourself and label it with RIU Explorers for 2024, do that. Nicholas has put together a presentation for us which he is excited by, which his colleagues are excited by. He's tried it out on them, so he's going to cover off on gold and he's going to cover off on rates and the future for all of us. So would you please make him very welcome.
Good afternoon, everyone, and thank you once again for the opportunity to speak at such an important conference for the gold industry, and at one where so many producers and investors are in attendance. Today I want to talk to you about the main factors that should influence gold through 2024 and how I see those factors developing. Firstly, gold does enter 2024 as a relatively high-performing asset, especially in cross currencies. Gold did well and rose towards the end of last year as those twin sisters that guide gold prices, real yields and the broad dollar, US dollar, fell from last November onwards. The angry nephew geopolitical risk was also positive for gold, sadly, after Hamas attacked Israel in early October and subsequently another Iranian proxy, the Houthi rebels, started to threaten shipping in the Bab el-Mandeb at the entrance to the southern Red Sea. I'll talk about that to some extent later in the presentation. All along in the background, central banks put in another huge year of gold demand that often matched and occasionally exceeded on a quarterly basis total world investment demand. And that helped gold higher, particularly in the face of the relatively high real rates and the US dollar in the early part of last year. Together, these factors all came together to provide the fundamental impetus for a powerful end to the year and a powerful beginning to this year. What then of 2024? And what is the likely pathway for those factors that affect and influence the gold price and, of course, all asset markets? I'll generally cover only those factors that I can make a sensible narrative out of. And also I'll look at things largely through an American lens, because it's still the world's economic locomotive. There's a strong first in, first out argument with regard to rates policy. And I think that many of the difficult calls that the Fed has to make are relatable to other central banks. Now, everyone widely accepts that interest rates will fall across the world, most of the world, in 2024. after a very rapid departure from the ultra-low rates in the COVID and indeed the pre-COVID era. And that's as the threat of inflation appears to go away and an easier policy setting becomes appropriate. Looking at the decline in headline inflation, that looks pretty reasonable. Whilst the Fed's preferred measure of inflation, the Personal Consumption Index, has fallen fast on a year-on-year basis from a high of about 5.6% 2 years ago down to 2.93 at the time of writing, other indices are ticking higher, and indeed overnight year-on-year CPI beat expectations. It's worth looking at the following charts and just asking yourself how rapidly rates are likely to fall in the face of recent strong economic data. So, for example, US non-farm employment changes shocked everyone in January with a rise of 335,000. US prime age employment is back to where it was pre-COVID. That's a really strong number. And crucially, US financial conditions are easing even through the period that the Fed is actually tightening rates. So both this is the Fed, Chicago Fed measure of financial conditions in America and the Goldman Sachs measure. And that's really doing some of the Fed's work for it because you're getting policy tightening, but conditions appear to be easier. So that sort of takes away, if you like, perhaps some of the impetus for the Fed to ease rapidly against, which is the sort of narrative that they're coming out with. Also, lower rates are likely to be challenged by the fact that this year we'll see significant issuance of US debt, estimated around about $2 trillion US. And in order to sell that debt, yields are going to have to be bid up along the curve. And that's going to work slightly against the narrative of a rapid decline in rates. The main point here is to be aware that the theme is lower rates, but it's all about timing and expectations. And 2023 was very much about getting ahead of those expectations and getting ahead of intentions. And I think that's likely to happen this year. So that's something to be conscious of and aware of. In fact, when I summarized where Fed rates were probably likely to start falling from and how far they're likely to fall, it actually looks very different even just a week later. So that gives you an idea of just how volatile people's expectations and understandings are. So to give you an idea, last week, the idea that the Fed would tighten in May was more or less baked in. But the drop from there was also fairly richly priced, that the rates would fall by 150 basis points. Now, looking at it today, May is definitely still the jumping off point, but the actual likely fall is much more strongly balanced towards 100 basis point, a 1% fall, not a 150 basis point fall. And that's a really, really dramatic change to take place in the space of, just 4 or 5 days. Overall, as rates fall though, the gold market will be a beneficiary of those lower rates. Now, the US dollar is facing quite an uncertain year for a bunch of reasons. The yield gap has risen slightly after recent statements by the Fed and recent economic data, which I referred to before. But it had been the case that projected falls in interest rates were likely to be larger than the Eurozone. And of course, the Bank of Japan is really likely, I think, to exit its negative interest rate policy in April of this year. Governor Ueda and his number 2 have been busy preparing the ground for that outcome for the last sort of month or several weeks. And it's been widely expected. In fact, it was expected even before now. But April looks like a fairly likely time, and that comes in before the Fed actually begins to loosen. So on balance, that looks like that implies a weaker US dollar. However, there's always a however. The political environment contains plenty of uncertainty, both domestically and internationally. And as a safe haven asset, the US dollar responds well to that uncertainty. On the domestic front, the Trump presidency contains the possibility of sharply higher and substantial tariffs on imported goods, particularly those from China. And the threat of those certainly would tend to keep the dollar higher, and certainly the reality would as well. Also, should richly priced US equities decline significantly for whatever reason, perhaps as the outcome of a completely unexpected trade war, for example, then that would be another impetus for a higher dollar. So additionally, cycle analysis, which I quite like, implies a stronger dollar. Now, out of sheer laziness and not looking at things very closely a couple of months ago, actually got into my head that the cycle was going to end in about April or May. But in fact, when I reran things on the same length of cycle, it looks like the bottom came in for the dollar, at least on a cycle basis, in January of this year. And that implies a certain kind of tailwind coming from the cyclical benefits. So where does that take the broad dollar? Well, targets go up to 108 and 110 in the medium term, and that implies something fairly strong. Given where we are today, that's not a huge call, but I wanted to look at something that would be meaningful over the course of this year. Now, central banks, again, like I said, over 1,000 metric tons of buying last year, 1,000 metric tons of buying the year before that. There's plenty to like about gold in the official sector. It's liquid and it's without liability. It's a proven store of value in the longer term, and its performance is augmented at times in times of uncertainty and fear. Also, the general trend towards government debt issuance in an already highly indebted world makes it a natural alternative to adding more bonds and notes from other foreign central banks to your international reserves. The most important takeaway from central bank demand is that it's largely or relatively price insensitive, so it's a good shock absorber in the presence of rising real rates or a rising dollar. And my expectations that the dollar might strengthen overall in 2024 would then be mitigated by good official sector demand. You can see just how big it is there. Now, China is the absolute standout consumer of gold last year. Mainland consumed 910 tons of gold. It's about a fifth of all total world demand and about a quarter of all consumer demand. The 16% growth in physical demand year on year almost certainly reflects a degree of post-COVID reopening. Importantly, is Chinese demand likely to be replicated, is likely to remain high during the coming year? I believe it will for a number of reasons. Firstly, positively speaking, investors are likely to add to a winning trend. Gold in yuan ended up last year 15% on the year. Secondly, the behavior of alternative assets, well, not alternative, but the alternatives, competing assets, has been abysmal. The Shanghai Shenzhen 300 stands at about 85% of its value at the beginning in January 23. Now, the central government appears to be positioning itself as the buyer of last resort. A major wealth management firm, one of many, but major one, went bust last year. And the products that people sell, or wealth management firms sell, they're opaque, and they're either implicitly or explicitly geared towards the property sector, which of course is doing badly. And at the epicenter of all of this, the most important part of the household balance sheet, which is property, is still in trouble. I think it's likely to remain so despite efforts to change that. Now, before I show you the next slide, unlike Australia, China faces a significant overhang of property, whether built and unsold or unbuilt. It's enough to represent another 12 Melbournes, and I think if my calculations are right, house the population of WA about 50 times over. So I've done a little graphic to represent this. It's like one of those little solar system things where you compare Mercury to the size of the sun. The red is unsold property, the blue and the yellow is just all the property in Australia. So it gives you an idea of just what a sort of a difficult situation they're in. Additionally, regional banks are thought to require about the yuan equivalent of over $306 billion of recapitalization, depending on the degree of stress within that sector. So supply fundamentals, the shrinking population, youth unemployment, and a dirigist government that appears antithetical to the interests and the benefits of the private sector are all stacked against a recovery. So given all the challenges that face mainland investors, you can see the appeal of gold. It's tangible, it's debt-free, it's liquid, simple to understand, and it's got a great history that they can refer to. So for all those aforementioned reasons, I believe that gold demand will remain high in China unless there's a substantial shock to the capacity of households to save and spend. Now, I'm just going to touch very briefly on geopolitical risk, and I'm aware that I could make a comment that's immediately challenged by changing events. So I stress it's not a prediction, but it's more to say that sometimes you should take the longer view about how these things play out. Post-October the 7th, it's notable that Middle East relations have proving more durable than some had expected. There is to some extent because violence by Hamas and Houthi rebels has only served to reinforce the reasons why Arab states are slowly converging on recognition and bilateral arrangements with Israel. Both parties recognize a common threat, and that threat has only become more starkly apparent. That's not to present a blithely optimistic take on a terrible and intractable situation. It's just to say that there are forces and events that push towards chaos but there are also centripetal forces that tend towards order. Now, having said all these good things about gold, I have to talk about targets and timing. Targets in this intensely denoised and long-term chart suggest on the upside 2360 and 2580 in US dollar terms. And if you plug those numbers, those strikes into an option calculator, what you get is, as of 2 days ago, what you get is a 1 in 4 chance of gold going to 2360 or above by February 25 next year, or 1 in 5 in 9 months' time. And for the higher target, 2580, 1 in 7 in next year, 1 in 10 this year. So the nearby target is not totally off the cards, and it gives you a sense of how the sort of crowdsourcing in the financial markets is pricing those probabilities. So, fortunately, I'm not behind time. I would just like to summarize by saying gold should enjoy continued support next year, or this coming year. There are good reasons to suspect strong demand from the official sector and from China to continue. I haven't discussed India at all, but Indian GDP growth forecast at 6.8%, it's reasonable to expect decent consumption from that giant. And indeed, if strong GDP growth isn't matched by productivity growth, then domestic inflation will also be a positive for gold consumers locally. Rates are, of course, likely to decline. The more important element is what real rates do and whether inflation is allowed to ride a little bit. Investors in the West are underweight in gold, so they can bring more ammunition to the party should the gold price rise. The technical indicators are positive. Physical demand in Asia is excellent and continues to be post-Chinese New Year. And lastly, the tribulations of the mainland Chinese economy are likely to put pressure on the Australian dollar, which is positive for Australian gold producers and positive for Australian gold investors. Thanks very much for your time and attention.
Would you like to come to the centre of the stage for 2 seconds for me?
Yes.
And stand out there with your adoring fans, because you've obviously got lots of them. Just stand there. I've only got 5 seconds, otherwise I'm in trouble. Quick, go. All right, there. And you have a smile. Look at me. There you go. Well done. That was a brilliant introduction to this session.
Thank you very much.
Thank you so much. Cheers. Really appreciate it. That was good. All right. Now, the rest of you watch that, okay? If you're under time, you get one of my chocolates. If not, I eat them. So the first of our gold companies presenting in this session delivered really stunning results in 2023. It's rolling over at this point in time in 2024, and I was listening to him talking to people. He was very excited by an announcement that he made earlier today. Some significant results reported. They've excited, despite the look on his face at this point in time, Simon Lawson no end. I believe he's a little bit unhappy about that small decline in gold prices. Would you please make Simon very welcome? We're talking Spartan.
Thank you very much, Chrissy. I just wanted to say thanks to Stu and Jackson and the rest of the RIU Vertical Events crew for organising such a great event. As usual, seems really crammed out there and busy, which is great. And it was good to get into this session, and I appreciate where Jack's put me, because I'm obviously followed by some pretty heavyweight characters in the gold producing scene, and I'm just a simple explorer at this stage. So we will roll straight into it. Again, I start my presentations with this image most of the time. It is a really good image. It frames what we do every day. We're sitting in front of a previously producing gold mine that we shut down in November 22, and then we proceeded to drill out what has become a very substantial high-grade system. So board and team, shares on issue. Sorry, the share price is incorrect because we actually went up today, which was good on that back of that good news. Mineral resources, obviously this is all available online, so you can read this at your leisure. I do have quite wordy slides. Just listen to the sound of my voice. If you would like to come and stand and take a selfie with our Spartan warrior in our booth, that would be very much appreciated. We are situated in the Midwest of Western Australia. Thankfully, not much jurisdictional risk, although I am glad to hear Nicholas talk about the buoyant price of gold forecast. I want to see it get to that point. We're currently in possession and have created 1.69 million ounces at just under 2.5 grams a tonne in front of our 2.5 million tonne per annum plant. As I said, we shut that down. It was a very difficult decision, but it was not viable in terms of its ore sources at the time, and we needed time to reset. We've now gone and done a lot of work around getting better ore source material in front of that plant. We're still continuing to do that to this day. We have 5 rigs on site at the moment, so very, very active. Never Never Gold deposit. Some people ask me why it's called that. I have gin in my booth if you would like to come and sample, and then you will understand through your taste buds why I called it Never Never. This is a very special ore body that we've found here, and Never Never is an amazing gin. Comes from South Australia. Every deposit at Dalgaranga was named after a gin when I started, but most of them were international gins. And given the gin revolution in Australia, I thought only fit to select some really good Australian gins to name our new deposits. We're focused within 2.5 kilometres of that plant. There's very repetitive number sequence here. The 2.5 is very important. 2.5 million tonne plant, 2.5 kilometres of that plant. That's exactly where we're focused, all on granted mining leases. This is our tenement package. Down in the centre of the image there, this is where most of the activity is happening, down here. So we have a lot of ground. We're not running onto the border of anything. If we find a massive deposit, which we have, and it tends to go towards the edges of a tenement, people get a bit freaked out, but we have a very big package there. So we're pretty excited. Zoom in a little bit. You can see the infrastructure that's in place. Right through the Gilby's pit there, the biggest pit on site. That is a conceptual pit design just to the right-hand side there. Sorry, I'll just draw on there. That's the Never Never pit conceptual at this stage. But this is the process plant. Within 600 metres, we made a discovery, and we didn't really know what we had until sort of midway through 2022. And I'll walk you through some of the images so you understand how this kind of evolved. We have a strong plan. I've always been very big on just making sure people understand what we're going to do. I did cop a bit of grief on social media this morning for using the word de-risk too many times in my management comment. I'm not going to apologise for that. We love de-risking our project. We came from a place where people saw risk, and we're going into a future where we want to take that risk away and make sure people have the confidence in backing us in what we're doing. Lots of numbers there. Plant's in a high state of maintenance. We have it sitting there, it's less than 6 years old. It's in incredibly good condition, and we're just building these resource ounces right in front of that plant. We're funded. Everybody says we're funded. We're actually funded. $39.2 million at the end of last quarter. So we're very well funded to do what we need to do. We are very aggressive with our drilling strategies. 5 rigs is not cheap. I saw my drill contractor this morning with a big smile on his face, probably too big, but they're drilling for us and delivering incredible results. Some of the ones we put out today, you know, it's a tribute to the team on site, working in 45, 46 degrees, incredible conditions, and they bring these things to the surface. We're focused. You know, talking about de-risking, we wanted to preserve the asset that we had. I didn't want to lose control of the company when we weren't making money, and I knew that we had this amazing discovery in front of us. We had 79,000 ounces at the time. I didn't have a lot of friends. There wasn't a lot of support for the Gascoyne Resources team at that stage, but we definitely put the foot to the floor, and we've really delivered through. So at the end of last year, we put 952,000 ounces at 5.74, 600 metres from that plant. So that has been a substantial vindication for why we made that tough call to shut that plant down. Again, just to show some nice high-res images, that's the plant in the foreground. Never Never Gold deposit, that's how close it is. Just that yellow ellipse right there. It is a long strike from the main system. The reason that plant was built is that big pit there. The reason that I'm so excited is because that plant is right next to this new system that we've discovered. Just a view looking back the other way towards Mount Magnet, which is about 47 k's away. You can see the red ellipse there. That is the surface expression, unmined, completely unmined, mineralised from surface, and we're down over, what did we put out? 878 metres was where the visible gold was at. 871 down hole was where the intercept started. So you can draw some long bows. I don't have grades on that drill hole yet, but given the statistics of over 400 drill holes proving that there is considerable high-grade gold, there's a pretty good chance that's mineralised. 5 rigs on site, that's 3 of them in the foreground there. The one that drilled that deep hole that we put out today is the one sitting right in the foreground there. That's looking back across the open pits and the infrastructure, just to really drive home how close these things are. Never Never's in the top left-hand side there, and the plant's right next door to it. We have all this area to explore and understand, because Never Never is only one example of a high-grade structure in what is a broad mineralised system across a big tenement package that we own. Just to take you back in time, and I apologise if I wax lyrical somewhat. This is June 2022. We knew we were onto something pretty special midway through that year. I presented this at the Gold Coast conference for Reed Corporate, Resources Rising Stars. I was pretty excited about this, 23 metres, 3.8. From a mine that had struggled to hit 1 gram, this was 600 metres away. And we knew we were onto something pretty spectacular. We got our crayons out, we did all these drawings. I know Stralow will enjoy that, because I spent a lot of time drawing with my coloured pencils up at Paulson's. It was a great thing to get that team together and try and figure out what was happening here. Fast forward to May 2023, we used the Airbus for scale. I copped a bit of grief for that. But, when people see these things every day, they know how big that is. It's a big airplane, and this is a big deposit. And at that stage, we were pretty excited that we're hitting 12 metres at 34.5 grams a tonne. And we've built a resource around that now. So fast forward to today, I suppose I'll point out on the right-hand side here, I'm actually putting those sections up for scale. This is how quickly this thing is growing with the drilling pace that we've got underway at the moment. That was only May 2023 on the right-hand side. And now we're looking at a plunge length of over 1,000 metres from surface. And what I really want to draw people's attention to, ore bodies are continuous. I used to get told by a former boss, if you want to find gold, drill near a gold mine. If you want to drill along strike, you're likely to find more gold. What you need to look at here is the thickness of these intercepts. The consistency of the volume in this deposit is unlike anything I've ever seen in the 20 years I've been doing this. I know people like to qualify like that, but 15 to 20 metre wide intercepts running over 6 grams a tonne on a consistent basis is pretty unusual. And then we use the Burj Khalifa. So the world's tallest building, I'll cop some grief for that too, that's fine. Over 830 metres vertical to the base of that building, and our deposit is on its way past that depth. So that is a big building. If you've ever been through Dubai, it's up in the clouds, and that's the equivalent height of what this ore body is deep at this point in time. We're pretty confident it keeps going. So in Verify, this is our sort of 3D imagery on the drilling that we've done so far, just to give you a bit of an idea. When it's lined up like this, it looks really nice, and it looks really obvious when you see it like that, but trust me, it took us a little while to work out what was going on. And we've delivered some of the best results that I've seen in my little career. We get 1 or 2 of these hits at some of the mines that I've worked at before, some of the world-class deposits that Northern Star went on the acquisition trail to get. We would see 1 or 2, maybe 5, 6 of these types of drill holes, and we're delivering these on a pretty regular basis. So I was getting a little bit nervous towards the end of last year. The ore body appeared to have lost some of its volume. We have a structural reason for that. We put that out a couple of weeks ago. We've expanded on that now. What's happened is on the other side of that structure, the volume comes back. So we're pretty confident that we can keep delivering, some pretty spectacular drill hits. And if you just look at the bottom of the page there, 300,000 to 952,000, 12 months, that's a pretty rapid growth story. Ounces per vertical metre, 1,000 ounces per vertical metre. I used to get Les Davis from Silver Lake in the early days banging the table saying we need more than 1,000 ounces per vertical metre to make everything work here. I'm pretty happy to say that we're sort of averaging around 2,000 ounces per vertical metre and higher as we get deeper on this ore body. And that is just a grade image on the right-hand side for scale against the ounces per vertical there. This is the Never Never MRE. This is actually the 720,000 ounce resource that I'm showing here, but this is the proximity to the Gilbey's pit. You can see how close along strike it is. It is a continuation of that mineralised system. It has been affected by a structural offset, and that is exactly why there is high grade sitting in that spot. And if you think there's only one of these, there's not. There's a number of these structural intersections that pass through this stratigraphic package. This is me again. Well, it's actually my exploration manager with his colouring pencils. We have a big set. 4 pillars and west winds. They're high-grade structures within the Gilbey's pit. When that pit was being mined, it was diluting those 2 high-grade, if not 3, there may be another one to the south there, as they were mining and ending up with a pretty low-grade result. And that's not surprising when you look at the grades in between these structures here. So we're reimagining, recreating the model for this. We're hitting things like 15 metres at 6 grams a tonne at the very end of our resource outline, at the very end of the Gilbey's pit. And there's a reason that pit ended where it did, because the structure cut off the mineralisation. And what do you know, there's high grade to the south of it, just like Never Never. This is it, looking at the block model, 2 gram a tonne blocks. Obviously Never Never just lights up like there's no tomorrow, but underneath the Gilbey's pit, I'll have to get you to squint. But this is the 4 pillars area here, and the West Winds one is actually a lot broader than I've been drawing lately. This area through here, we're seeing 50 metre wide intercepts there, which, you know, 1 gram a tonne doesn't get pulses racing, but when you think there's a pretty big mill on the surface here, and there's plenty of operations that have demonstrated you can put low-grade material, bulk material, tonnes, against high-grade underground sources like Never Never, and feed into a plant, hypothetically making a lot of money. Sly Fox, forgotten deposit. We were so busy looking at the other end of the belt, we actually sort of left Sly Fox alone. Sly Fox was the highest grade deposit at Dalgaranga before we found Never Never. It was always thought of as a high grade, narrow plunging chute. That's exactly what we thought Never Never was, and now we're 1 million ounces later. We thought, why not? Let's throw some holes into it. 50 metres away from that resource, we're hitting 50 metre, 35 metre true width zones of mineralisation in places they shouldn't be. So who knows how big that could be. That's a bit of an overview. Sly Fox on the right-hand side there, just running through here. Plymouth, another deposit, Gilbey's, and Never Never down beyond there. They're all dipping in the same direction. There is some system-wide process going on here that results in high-grade accumulation. I'll skip through a few slides here because Chrissy's walking pensively towards me. That's where we're drilling this year. Never Never, flat out. Sly Fox, flat out. And we're going to drill underneath the Gilbey's pit to get these high-grade zones working for us. That's our drill rigs. That's our gravity survey. I'm going to miss out on my chocolate bar. But why invest? Facts. These are the facts. Everything's proven. We're not talking about potential. We've delivered. We will keep delivering. That's what we do.
Great, Counsel. I like the ending. Well done. You still don't get the chocolate though. We've got rules to keep and standards to adhere to at this conference. Good on you, Simon. That was a great presentation. All right, you can see why it's excited. Gold Road Resources, explorers and producers, a story that is so big. It takes not 1, but 2 people to tell. So we've got a geologist and we have a lawyer. I'll let you try and figure out which one is which. Julia Jones and young James. Rightio. Okay, so Mr. James. So I asked them both what excited them most about getting up to tell this story, why I needed 2 of them. They said, oh, we've got so much happening. We've got 5 really big exploration projects, and then they just kept going. So without further ado, would you please welcome the dynamic duo to tell the story of Gold Road Resources.
Thank you, Chrissy. And yes, we have been asked why James and I are presenting, and it is because we've got some really exciting projects. I'm on the corporate side and James is the geologist, and some of these projects are brand new to Gold Road. They've just come in the last couple of months. I did the corporate work and James is super excited to be boots on the ground out in the bush, hopefully finding some great gold on them. For those in the audience who are not familiar with Gold Road, the company has been built on the back of the world-class Gruyere discovery made in 2013. Gruyere rapidly progressed through exploration and development, and last year, just 10 years since discovery, Gruyere pulled its 1,000,000th ounce. Gruyere is underpinned by a large, long-life resource base with a mine life out to 2032. and Gold Road's total attributable mineral resources are 4.8 million ounces across Gruyere and Yamana. James is going to be speaking a bit more about the actual plan to deliver further value from Gruyere a bit later in our presentation. While Gold Road has, in a financial sense, been built on the back of Gruyere, its success is really about what can be achieved through the hard work and dedication of your people. We are pleased that these people are going home safely, with Gruyere now 1,000 days LTI free, and Gruyere and Gold Road's combined LTIFR at 1.9. We are also pleased that gender diversity at Gold Road sits at 32% female and 68% male, with those identifying as Indigenous making up 9% of our workforce. Diversity is not just a metric for us. It's about creating a workplace where everyone feels included and is given an opportunity to thrive, regardless of race or gender. Turning back to production, to the gold. Gold production at Gruyere for calendar year 2032 was 322,000 ounces, delivered at an all-in sustaining cost of $1,662 per ounce. Guidance for 2024 is set at annual production of 300 to 330,000 ounces at an all-in sustaining cost of $1,900 to $2,050 per ounce, and is supported by rising ore grades, increased plant throughput. We closed calendar year with $150 million in cash, no debt, and no hedging. And this strong balance sheet enables Gold Road to dedicate a robust budget to exploring its exciting greenfields exploration portfolio, which James is going to talk about.
Awesome. Thank you very much, Julie. As Julie noted, I'm going to just start taking you through Gruyere, which is centered in the middle of the Yamana Greenstone Belt. There's substantial life of mine extensions and growth opportunities in both the resource and reserves that remain and can take this project beyond 2032. There's three main elements here. The first is the large open pit on the eastern tenement boundary, which is the long section above. We've also got the Golden Highway trend, which includes the Attila and the Alaric deposits. And then lastly, we've got the longer term potential, which is mining underground at Gruyere. And it's the last 2 points I'm going to focus on next before getting stuck into the greenfield story. At the Yamana deposit, I mean, it's underpinned by 3.38 million ounce reserve, nearly 5.25 million ounce resource, and then there's nearly 1 million ounce of underground resource available as well currently. And we know that the ore body, the vertical continuity, is over 10,000 ounces per vertical meter. And we're pretty confident, and we anticipate this endowment to continue over 1 kilometer at depth. Drilling completed in 2021 indicated that this mineable widths and grades continue, not just 1 kilometer below, but 500 meters beneath that pit. And we estimate there's a substantial underground resource there going into the multi-millions of ounces. This deeps area is going to be the focus of the mine exploration team through 2024 and 2025, and drilling is going to focus on those black dashed areas where structural mapping and grade control data indicates high-grade shoots continue beneath the current pit base. Drilling is underway and scheduled to continue through 2024. Moving on to the Golden Highway, which is 25 kilometers west of the Gruyere joint venture. It's defined by a 14-kilometer, the model behind there is a 14-kilometer, 400-meter wide corridor of approximately around that half a gram mark, within which you have high-grade shoots. We've got Attila in the south and Alaric in the north. It's worth noting that mineralization continues into the 100% gold-owned tenements through the Yamana belt there. At the Golden Highway, at Gold Road, we've been managing the exploration, the resource definition, and the geological modeling over the last couple of years. And in the last year alone, the team has pulled together what's on the slide there, which is the single geology model, allowing all the different resources finally, for the first time, to start talking to each other. The infill work, coupled with high-grade geological modeling, has resulted in, and domaining has resulted in overall grade upside and ounce upside. And all this drilling was completed ahead of schedule, which has meant that we've been able to hand this over to the GJV team, where they're going to continue feasibility level studies and surveys required to get this into production in 2026. So just moving now onto the exploration portfolio. So yeah, since the last time we were here, the tenure that we've acquired has grown substantially. I think this time last year, we're somewhere around the 3,500 square kilometers. And I think you'd agree, we're now sitting at the 17,500 square kilometers of tenure managed by Gold Road ourselves, myself and the rest of the exploration team, and we've got 7,500 of joint tenure under joint venture agreements. Those are the Yarra de Bryah and the Stuart Shelf projects, which Julie's been helping setting up all those management agreements. So over the last year, we've continued to work on district scale evaluations, which has resulted in a very diverse portfolio of targets, stretching not just orogenic gold plays in West Australia, but also intrusion-related gold plays in the eastern states. And just, yeah, handing over to Julie for a second. She'll just take us through some of the corporate development that we've achieved in the last year to get us up to that, those new projects.
Yeah, so within the last few months, we've acquired some significant tenement packages. One is in the East Laverton region, and we acquired that, we're calling it from we acquired it from Alberta, and that was acquired in December last year, so it's pretty new to us. It's effectively a large contiguous land package that has been largely unexplored up until now. And James is going to talk a bit more about the exploration program on that one this year. We've also, just in the last 2 weeks, acquired a tenement package which is on the screen called Bolter, which is in the Gascoyne region. And again, it's pretty much unexplored. Maybe there's been some rock chip sampling, but
that's it.
Yeah,
that's it. So, yeah, so we've been up, yeah, I'll go through that in a second. I suppose lastly, the last point I'd like to make is this portfolio now gives us a bit of optionality. So we've just seen over the last year, we've had law changes as we've got increase in climatic events, weather events. We've seen all the rain and the heat that we've been having in different places. This can lead to delays to project entry or getting on ground. So this optionality, not just east-west, we've also got north-south as well. So this allows us to keep working all year round. And this increasing that chance of discovery, which is, as we noted up there, funded by a healthy $30 million. So just returning to Yamana for a second, we've been testing the high priority exploration targets through 2023. And over the last couple of years, we've delineated nearly 40-kilometer strike between essentially the south of the Yamana tenements in yellow, the JV tenements in yellow, down to Earl's Find. Between these 2 points, there's a series of sub-parallel shears, and that we will be looking to start resource development drilling over the next year. So looking into 2024 and beyond, the exploration strategy is now shifting focus at Yamana to accelerate the development of these resources along that shear zone, and with the potential to process through the Gruyere JV processing plant. The initial focus is at Gilmore, which we've got some images there on the side of the screen there, where initial drilling will be essentially establishing that full mineralized footprint of that resource before moving on to drilling out footwall veins, which we can see there in the light pink color. These haven't previously been included in any form of mineral resource and provide a significant upside potential for this area. Once we've completed here, we'll start moving down along the trend with potential resources progressed to create a pipeline of mining options for the company. Development of these resources has the potential to add significant value and higher attributable ounces to Gold Road. Mallina, you may have remembered we picked this up in late 2022, and the tenement package is directly along strike from the recent De Grey Hemi project. Over the last year, the team successfully targeted and delineated an intrusion corridor highlighted in the pink circle there, which is a splay off the regional Mallina shear. Maiden drill programs have returned encouraging results, intersecting alteration and mineralization including visible gold in some of the drill core. Other work completed during 2023 includes geophysical surveys and soil sampling, which have provided the basis for our exploration targets and work into 2024. Moving on to Bolter, which Julie is going to give us a little update on, since she was being heavily involved in the acquisition of this project.
So the Bolter project is located 250 kilometres southeast of Carnarvon, and as I said, it's just come into our portfolio in the last couple of weeks, and as soon as it came into the portfolio, the geology team jumped on a plane and drove out there, and it was pretty hot.
Yeah, 40 degrees isn't going to get in the way between geologists and some hot rocks. So.
No, and they came back filled with excitement. So I have to say it's one of my personal favourites because the hot weather didn't put anybody off. That's how exciting the team found it. In terms of the technical side, I'll let James talk to it.
Yeah, so this project's come in. The team's been thinking big. They've been developing new ideas and challenging dogmas. Edge of cratons has always been a bit taboo in Australia. However, we've had the last recent discoveries outside of Hemi, thinking Novo, Tropicana, even Gruyere, have all been on craton margins. This project is located on the northern margin, which has seen virtually no exploration over the last 20, 30, 40 years even. And the area in question hasn't had a single drill hole into it. In fact, the last soil sampling completed in the last year has delineated 2 multi-kilometre soil samples with rock chip grades ranging from 1 to 19 gram per tonne. Just moving on to Laverton.
So our East Laverton project was acquired from Abata, and it's located 120 kilometres southeast of Sunrise Dam, within the Mini Gual greenstone belt within the Burtville terrain. I might hand the rest over to James because it's quite technical.
Yeah, no, so this project has come in through the Abata Resources team. And again, this is a traditional orogenic gold play in the Eastern Yilgarn. However, as you can see from the image on the right-hand side, it's had a dearth of real drilling occurring over the last, since first exploration has occurred on that tenements by WMC. St George and WMC focused, as you would expect, on komatiitic and nickel sulfide potential. However, minor gold results have never been followed up in this area. So this year we plan to focus on doing land access and getting on ground.
We're very mindful that we're down to our last 45 seconds to tell you our exciting story. So we're going to quickly talk about Queensland.
Yeah, so over the last year, the team's continually evaluated the work up in the Greenvale and Galloway projects. This has resulted in us consolidating additional tenure. We've also found encouraging old drill core that had never been sampled. There's some photos on the slide there. These polymictic breccias and alteration are very encouraging, and we're just waiting for the assay results. And these really confirm that we do have very similar system to Mount Lawson. And then lastly, we've got the Galloway project. So this is another huge land package. It's over 4,000 square kms, and it's supported by numerous cult era features, which I'm getting
which are super exciting for us.
Super excited. We've got plus gram dirt, so we'll have to leave now. Thank you.
Thank you.
Well done, guys. Just have a great way always to wind up your talk to everyone there, because I know you're super excited. We've got so much more to tell you. Come and see it as booth number. What booth number?
We don't know.
We don't know.
You don't know? Just follow them around. They'll be outside. Thank you so much, team. I love the enthusiasm. Gold Resources. There you go. And I've got 2 more to myself. How did those 2 end up there? I don't know. Right, our next company. What are you doing? Just dropping leaflets around randomly? For you? Okay, all right. Well, this is Southern Cross Gold. Now, what do you keep in mind? The first time that we saw them was RIU in Sydney back in 2022. That was June. You listed in May. They hit the ground running. Best IPO of 2022. Got a lot of upside. I'll give you more time. Would you please make them very, very welcome? This is the lovely Michael, everyone. Michael Hudson, MD.
Thank you, everyone. Happy Valentine's Day. Happy Valentine's Day to my beautiful wife in Melbourne, if she's watching, which she probably isn't, but at least I gave her a nod. Thanks, Chrissy. I'm going to talk to you about a discovery, one of the best discoveries globally in the space. We've been running over the last year or 20 months, and it really has taken us to another level in the last 4 or 5 months. So let's have some fun, move through the less fun bits, which is the disclaimer there, and let's just try and rank a discovery. How do you rank a discovery is always tough. Now, we got 45 kilometres into this system. We put 30 in the last 12 months, and the hit rate here, let's say 100 gram metre hit rate, we've hit 25 of those in 45 kilometres of drilling. I haven't been able to see anything better globally. Please prove me very wrong, but it's a very, very good start. We're still very much working on demonstrating grade. This is a very high grade system, and you'll see that very early into the discovery. So lots more to come. And this is a big system. Big systems have big footprints, and this is over 10 kilometres, and we've only looked over 1 kilometre so far. How do you discover? You drill lots. You got to have the cash. You got to have the permits, and that we do. We bought the freehold land over the discovery early on, just to simplify our access and future ease for the project. The cap structure, a couple of points. Institutional holding has increased dramatically over the last 6 months as we've gone from that traditional IPO to now being supported by some of the larger funds around the world, including here in Australia and overseas. Corporate is 50% here, 51% is Mawson Gold. That we spun the projects out of Mawson. I chaired and co-founded Mawson, and those shares will be distributed to Mawson shareholders when the 2-year escrow ends in May. And we have about 70% commonality of shareholders, mainly those institutional shareholders between Mawson and Southern Cross now. So we put a lot of work into aligning the shareholder base as much as anything. Good projects keep getting better, and this one is no different. Here is essentially our database summarised in one slide. So you can see our best intersections, the top 10, the width, length, and the gold. We also have an antimony component I'll talk to. We say that the antimony will help permit this project. The gold will pay for it. You can see that the extraordinary high grades over good widths, the drill hole lengths there. Importantly, it's getting better. The top 5 there have come in the last 4 or 5 months. So we're understanding the system better, it's getting better at depth, and we've got the good fortune that absolutely the system is developing in only a way we could have dreamed perhaps 6 or 7 months ago. The assay database, if we take the average of the assay database, it's an Excel spreadsheet. This is where we listed the company in May, so time is on that x-axis. The intersection width has remained similar at about 4 metres, but look what's happened to the grade. It's just taken off. It averages get influenced by the very high grade numbers, but that's what we have, and we're averaging over 20 grams just from an Excel spreadsheet. But you can see that trend. The trend is your friend. This is getting better and has not stopped. Victoria, this is really a slide that the Canadians understand very well. I've had 25 years in the Canadian market, and this is the first ASX deal that I've been involved with. Many over in Canada. All the money has come into Victoria essentially to re-establish Fosterville, which was the highest grade gold mine on earth for 4 of the last 6 years. It was running at 40 grams head grade, lowest ASIC, and was a top 10 producer. We're in the shadow of the head frame of that project, but also we've been able to learn why that developed to be such a good project. It took them 20 years of mining to find these very high grades. We've been able to do it over the last year because we're standing on their learnings, the shoulders of giants, if you may. Victoria was known as a very good field in the middle of the 1800s. 80 odd million ounces came out, and then of course the industry moved across here post World War I. These have a high CV, a coefficient of variation. They're very nuggety and hard to put together. Whereas these ones have a low coefficient of variation. They form very good reconcilable mines. And when you get into these systems at depth, they form great deposits, and that's influenced our thesis to drill early to depth. So we're drilling commonly to 1 kilometre, and you want to go through that brittle ductile transition where these grades become very super high grade. And we've seen that in our deposit. That was what made Fosterville the $1.5 billion of free cash flow a year. And there's another mine called Costerfield where they're seeing the same thing. So a similar playbook. It's all about the gold. We've got lots of gold. This is just one piece of core. We'll come back to it, 0.4% gold. It comes from our project, just zipping through with 9 minutes left. Melbourne, our project here, Sunday Creek, Fosterville's up here, and Costerfield that I mentioned. So we're about 60 k's from Melbourne. Sounds very close, but we're actually in some areas that have been original titled areas. We've literally, to the south of our project, you can go 8 kilometres and not hit a house. Very important in Victoria, because you can make yourself life very difficult if you're around hobby, smaller farms. That's not the case in this area. We're about 100 k's from Fosterville and 60 from Costerfield. Let's zoom in. And here's the, after lunch, no good. Here's Sunday Creek. This is 100% owned. We have 2 other projects. Won't talk about those, but we've made bona fide drill discoveries, very high grade gold discoveries on those as well. We have the strike extensions of Costerfield. This is Costerfield and Fosterville, just to show you the lay of the land. Let's focus in on the project that really matters, that's delivering all this wonderful gold. This is the area we focused on. This is 2 kilometres here, so it's about a kilometre or so we drilled over strike length down to about a kilometre. Importantly, these old mines that you can see in stars here extend along a 10-kilometre trend. And that 10-kilometre trend is the extension of this system. It's a big footprint. Big systems have big footprints. And so we've got lots of room to move. About 43 kilometres of the drilling has been taken here, 2 kilometres up here. So we have hit high-grade gold up through here, but very early days into the extensions of the system. The other way to look at this is our freehold land here that I'm just circling, and the soil samples in the little bars, and the key focus of the area with the system extending out through here. There are parallel zones that we're dealing with too. So lots of exploration upside that I can't get any more into the detail with 7 minutes to go. So let's just look into this little area here, and this is the next one, it's the geological slide, just to work out how this system actually works. So if we place we say our mineralisation is very much like a ladder. So the sides of the ladder are here. We're looking down in plan view. This is about 400 metre scale. So in plan view, the sides of the ladder are this structure. That structure extends for 10 kilometres out bush, and there's the parallel zones that I talked about. We've only missed that structure that hosts all the golds in 2 holes out of 100. So it's very targetable. We know when we're going into it, and we know when we're leaving it. And within that host structure that has the rails of the ladder, the rungs exist. And these rungs are the vein sets that host all the gold. We've got 42 of them so far. 3 months ago, we had about 30, so we're finding more all the time. This system's getting a lot bigger, and I'll show you how it's expanding. The veins are 2 to 20 metres wide. Sorry, 2 to 20 metres wide. They're 20 to 100 metres long, and they extend from surface down to a kilometre. Any one vein we can map over about 600 metres. Importantly, that CV, when we model these and have enough drilling data to inform us, has a very low CV, about 1.5, which is what resource geologists want to see. It shows consistency of the model and not that nuggety system. So that's not what these very different styles of mineralisation that has reinvigorated the Victorian goldfields over the last 6 or 7 years. Low CV. There's your geostats learning for the day for those who are interested. The piece of core we looked at before here is showing, let's see where that sits. That sits about 500 metres below the surface. You can see the surface is here. And what we're looking at is some of the old mines. They mined this down to 200 metres in the late 1800s. Over the field, there's another mine down to about 100 metres there, I should say. Another mine here. So that's over about a kilometre, down to a kilometre. That's our key focus. The yellow holes are those holes in the lab. So we've always got lots of drill results coming with 4 rigs turning. You'll always see lots of news flow. The black holes are those we've reported, and the yellow dots are the plus 15 gram hits, only showing you the very highest grades here on this slide. If we look down, looking to the north, again up here, this is the rails of the ladder and the rungs of the ladder, as we showed it before. So in this case, the rungs are those grey veins. The The important pieces to take away from this are some of the best holes drilled globally. I'll just put over the last year, here, and let's say here. So these are made up of lots of high-grade veins. There's something like 18 in that drill hole. That's 200 metres between those drill holes. This hole averaged 400 metres or greater than 400 metres at about 5.5 grams. This one was about 300 metres at closer to 7 grams, but, you know, made up of all those high grades. And then when you get into one of those veins, here's 20 metres at 60 grams there. True width is about 11 or 12 metres on that. So you can see some very impressive grades without a doubt. But what does it all mean? What have we actually got here? So let's just take some of the numbers off that maybe you've read. And let's make some assumptions. Let's take off these veins here underneath this old mine here where we haven't got much information. We stepped off here, so we don't really know much what's 500 metres down here, but we know the system continues. We hit very high grades down there. But let's extend these veins down to the depth here. So what does that look like? That looks like this. And this is our exploration target that we just put out over the last week or so. So it's the first attempt at quantifying what we've got. Too early for a resource, but 43 kilometres of drilling, wire-framed, top cut, and treated as best one could. So it's really constrained to the drill area. Let me just put that in blue because that black might be hard to see. And if we put it around there, you can start to see that area there. The mineralisation, you can see we've got some good hits up to 400 or 500 metres away. We've got the old mines that had lots of stopes, 20 stopes here. So we know that the mineralisations exist near surface here and it should continue down through here. I've already talked about the 500 metre step out down there and where we're going here. So in the blue, we put an exploration target out, and please read all the qualifying language around that, between 1 and 1.6 million ounces at 7.2 to 9.7 grams gold equivalent. That's, you can see, is very close, a very small part of the red area. So we can see a footprint here, and our aim is to find a 3 million ounce target here. We know that it continues out this way for 9 of the 10 kilometres that haven't been drilled, and we know these systems can continue for up to 2 kilometres by the mines around us. So this is going to be a very high grade system and going to get a lot bigger. Let's just talk about a few other aspects. The antimony piece, I talked about that as going to permit the project. It is genuinely, this project is going to be one of the larger antimony mines in the Western world. We have lost control, like we have many critical metals. It's on all the key lists, and we're talking to some of the key partners, the Japanese and the US, around this project being a very part of re-establishing that supply chain. Metallurgically, it's pretty simple. It is free gold, so plus 80% is native gold. So that's what we want to see. We get 20 to 40% into gravity, and with flotation, 93 to 98% recovery of the gold. We produce an antimony con that has very good payability. There's smelters worldwide that treats that. The only secret is to keep under 3% arsenic, which we can, and that keeps your penalties down. Sometimes we had to produce a separate con that was a sulfide gold con, great gold grade, but importantly also free gold. So we're doing lots of the key points behind the scenes, very well trained. We're building resilient communities through the local people, municipalities, and the native title holders. So with Chrissy coming over my right shoulder, I'd like to thank you all. Please join us on this journey. Very early days. We've got Boyd and Nick handing out paperwork, and we're just very excited what we found and look forward to the next year. Thank you.
No chocolate for you. Well done, my God. Good on you, buddy. Nice wrap up, though. Keep that in mind, Wade Bramwell, as you make your way up to the stage. Come on up and join us. So Westgold Resources is next, represented here by their Managing Director, Wade. Now, Wade, I think you're going to love the story that he's got to tell, because they've just gone over $1 billion market cap, which is very impressive. I must ask the question, though, why have I never introduced you on stage before?
Good question, Chrissy. I wish I knew.
Oh, don't take it out of your 15 minutes. Keep going. Make him welcome, please, everyone.
Thanks for that, Chrissy, and thank you all for attending today and for those watching online. This presentation is going to be quite different than the previous ones you've seen. And the reason being is you're going to hear an exploration story told to you by a metallurgist. What could go wrong? Let's find out. Today's presentation is very short, quite conscious that I want to win a chocolate from Chrissy. She might invite me back. But really, the presentation really only has two objectives today. Really to give you a glimpse into the opportunities that Westgold sees within the Murchison, and also to explain a little about our approach. Firstly, who is Westgold? We're a West Australian mining company. We produced 257,000 ounces of gold last year at about $2,000 an ounce all in sustaining. We are 100% West Australian. We're now profitable and generating cash. At the closure of the last quarter, we had $238 million in cash. We are debt-free and unhedged. We're a little different than some of our peers in the fact that we are our own underground miner. We have 500 people in our underground business, and we also have quite a sizable drilling division, which I'll speak to. We own 7 drill rigs and there's 60 people in that division. Our resource is large, 8 million ounces, and reserve 2 million ounces at the moment. The obligatory corporate slide. And this is why you're getting a different presentation today, and I'll point you to 2 points here. One, General Manager, Exploration and Growth, Mr. Simon Rigby. Simon, if you're watching online, thank you. Simon's got 11 rigs running in the bush at the moment. That's why he's up there and I'm here doing this. So you can thank Simon for the fact that you've had to see me tell this story. The key point to this slide I'd like to draw your attention to is the movement in the Westgold share price in the last 12 months. A lot of that, I believe, is attributable to our two things: us getting back to basics and reinvesting in exploration. The Murchison. The Murchison is our backyard, and Westgold is committed to the Murchison. We control 1,300 square kilometres of tenure in this area, and though the Murchison may not have the sex appeal of maybe the northeastern goldfields, it's a significant gold camp in its own right. There are 4 deposits within that map which have produced over 1 million ounces of gold. We own 3. And this is a lot of the point about what Westgold's been doing in the last 2 years. Really, ourselves and some of the other explorers in the region, the work we're all doing is going a long way to changing the perception about what the Murchison is. The Murchison is considered a mature gold belt. Some people think the word mature and bad go together. Because it's mature doesn't mean it's bad, quite the opposite. 35 million ounces of gold is significant, and as we're saying, 4 camps with significant production history, it's a significant gold producer. There are multiple companies still exploring and building gold resources in this area, and many of those companies are here today. So full respect to my peers as far as the north as Tietto Minerals, Great Boulder, Odyssey, Aura, and the Spartans in the south, who all clearly have the same view of the Murchison that we do, that there's a lot more to be found. One of the perceptions is the best has already been mined. Couldn't be further from the truth, and I think you heard a presentation a few before mine that shows that the Murchison, there are still a lot of things to find here. We've started 2 new mines in the last 2 years, and with a significant investment in exploration, we're building out that pipeline for future mines. Westgold explores. We have continued to commit money to drilling over the last few years, and again, in terms of getting back to basics, that's one of the significant changes that have driven the re-rate and the perception change in Westgold. How do we change the perception about the Murchison? Collectively, we drill. Last year, we spent $19 million in exploration, and this single slide shows what we did. 246 kilometres of drilling, and I'm very happy to say my team logged all of that. That's a significant effort by a committed group of people. A lot of that drilling went into grade control and resource definitions around our existing mines, but there was a significant investment, 40 kilometres, into greenfields targets. What did that deliver our shareholders? It delivered a 4% increase in resource, a 7% increase in our reserve grade, a 6% increase in our reserve grade, and our mineral resource grade improved as well. This year, the budget's $25 million. To the half, we're bang on. We've spent half of that to the end of December. what is this all really about? Really, as a mining company, we are serious about committing to invest to exploration. I don't see exploration as a cost. I see it as an investment, and others may have a different view, but it's been a game changer for our business in the last 12 months. In today's presentation, I'm really only going to talk to 2 case studies because I'm time limited about our approach to exploration, which is really around the Great Fingal or the Fingal Dolerite and the Bluebird mine at Meekatharra. Case study 1, the hunt for the next Great Fingal. Great Fingal is a historic mine. It's an iconic mine in Western Australia. Many people know of this mine, and it was a really proud day when our board approved capital for the restart of this mine. This mine, it's hard to explain. It's one of these mines you have to go to, and it is steeped in history. The issue we've had with this project, Golden Crown and Great Fingal, is people think that's it. And we've started to tell a different story about the Fingal Dolerite. And what we've effectively done, we've stood back a little bit and tried to explain to people that the Fingal Dolerite is a fertile zone. Westgold and others have mined multiple pits across this thing, with the largest being Great Fingal and Golden Crown. But the key message here is these things don't fly alone. A lot of the things that have been found here have had surface expressions where one of the biggest producers, Golden Crown, didn't. I'm very happy to say that most recent work done by Simon and his team, a new gravity survey, has basically started to look through the cover here and identified 5 new targets which are blind. 5 new targets which could be analogous to the Golden Crown mine, which produced 1 million ounces. This is pretty exciting stuff. We've only got 1 drill rig at Great Fingal at the moment. These 5 targets are good to go, and the team's been instructed, and politely, to start drilling these things this quarter. Case study number 2, Meekatharra. And some of you out there will be going, where the hell's Meekatharra? Well, Meekatharra is another historic gold camp. If you look at the top image there, you can see the multiple pits that have been mined across what we call the Bluebird Trend. And the bottom image really shows something which is quite common across all of the Murchison. There is a lack of deeper drilling. Why is this so? A lot of it is because some of these things don't have a surface expression, or because previous owners were more open pit focused, and that's what they looked for. Westgold's key capability is underground mining. We're not scared of drilling deeper holes, and we're certainly not scared of mining underground, because that's what we do. If you look at the bottom image there across this 11-kilometre trend, the only thing which has got any substantially deep drilling in it is underneath the Bluebird pit, which is drilling that we've done. Today, as we stand here, we have 5 rigs at Bluebird. We haven't, this system, South Junction Bluebird, we haven't yet found the edges of it. We've got 3 rigs on surface, 2 rigs underground, and they are hammering this thing to try and find the fringes of this thing, because already we've doubled the scale of this mine in the last 2 years, and we can see it growing again. A much better image in terms of understanding what really Bluebird and South Junction looks like. You can see the underground development there. He's gone crazy. So you can see the underground development there underneath the South Junction pit, and the boxes 1, 2, 3, 4A and 4B really shows our drilling plan. We are drilling box A at the moment, which is really the extensions of the South Junction and Bluebird system. We're hugely excited about this project. It's literally within a few hundred metres of our Bluebird mill, and it's key to changing the perception of the Meekatharra camp. Getting to the last slide, and I'm going to get a chocolate from you, I think, Chrissy. Really, I just want to close the presentation and leave the audience with a thought. As a mining company, this is our approach to capital allocation. In terms of building a sustainable business, you only really have 2 options. You can buy other people's ounces, or you can grow your own. We've got 11 rigs running today, so it's clear what Westgold's view is of where we allocate our capital and the value and opportunity we see within our package. That's it, Westgold.
It says 4 minutes and 54. I feel like I should be giving you more than just 1 chocolate. Since I've got a little bit of time on my sleeve, I'll get you a photo for your Virgin. Is this your first time you've ever been to this?
I was a much younger man when I was here before, I think.
Oh, is that what it is? You're not really a virgin at all. Okay.
Well, look, in 2024, you allowed to say that?
I don't know. This is the It's my stage. I say nice. I'm not. Am I offending anyone? No. Out. Be gone.
There's no HR people here.
No. Did you watch those HR people or any of the HR
Come on.
people? No. Here, turn around. We'll have a photo. All right. Can you all look very happy, please, behind us? There you go. You ready? My arm's too short. Is your arm longer? Because you're older than me and more experienced. Jeez. There we go.
Okay, let's get the...
One of the chocolate.
Try and get you in there.
Who is that in the background? Kurt's trying to get in there. Thank you very much. You certainly interest all. Would you please put your hands together for Wade, everyone? All right. This one I know is a Virgin conference goer, are you not? Look at that smile of anticipation on his face. Slightly smaller market cap, but still large, $700 million. Tietto, is that correct?
That's it, Tietto.
All right, let's hear the story. This gentleman in front of us is Matthew Wilcox. It's going to be a very interesting story. Put your hands together, please.
Thanks very much, Christy. I'm Matt from Tietto. We are basically a new producer, and obviously I'll go through that production stage pretty quick and get on to what we're exploring for the rest of the year. So standard disclaimers, you're free to read it at your own leisure. So Abidjan is a low-cost mine in Côte d'Ivoire. Côte d'Ivoire is probably the jewel of West Africa at the moment. It really is like a fantastic place to do business. It's got great infrastructure, power lines, 12 cents a kilowatt hour US power. We've got a road network that gets us 500 k's to site in just over 5 hours. And, you know, the project's economics are exceptional, and, you know, just over $1.3 billion based on a $1,900 gold price, which, according to this morning, is approaching pretty quickly. We're unhedged. We're pretty confident about the gold price remaining high, especially as US interest rates start to drop. And we've got a very large prospective land package, over 1,100 square kilometres around our permit. Significant resources that we're sitting at 3.83 million ounces at the moment. That's grown from just over 500,000 in 2018. So it's been a rapid growth over the project, and we've got some really good ground outside of our project area that could potentially turn into some new mines as well. We've got the unaudited cash, bullion and VAT in just over $80 million AED at the end of last quarter, less than $10 million US debt. We're really looking forward to having a very strong quarter and strong for the rest of the year. We have guidance come out at the end of this quarter, and we're looking to have a really strong year in line with our life of mine plan. So that's our corporate snapshot. As you can see, we've got two large Chinese companies on the board. One of them is just, well, not just, but in the last 5 months lobbed a hostile takeover at us. That's Shaojin, who's currently sitting there with 7%. Shifeng and all the other large shareholders have publicly sort of come out against what we see as an opportunistic and underpriced offer. We're looking, it hasn't traded at 58 cents since the offer came out, at or below, so they haven't picked up a whole lot of shares. So we're hopefully see that offer go away, and we'll grow right into the future. That's our team, and we've all worked in West Africa pretty solidly for the last 15 years. A lot of us come from a lesser known Russian miner, you know, that does about 1 million ounces, called Nordgold. And, you know, we've been, Clinton and I met, I think 15 or 16 years ago at Resolute Mining for the commissioning of the Syama roaster, and the rest of the team I've worked with in various roles, you know, for over 15 years. It's been a difficult 2023. We poured first gold. We hadn't done our pre-strip mining, so we really got stuck with no ore. You know, we put out a mineral resource, and then, yeah, like Kagan Wang, our founder, he stepped down, and I got promoted to managing director. We got Clinton on board in August, and we got an opportunistic takeover offer in October. So Clinton moved all the way, relocated his family back here for the role. First day of the job, he gets a hostile takeover bid. So it was pretty hard. Since December and January, we've had successive plus 13,000 ounces of gold production, and we're looking pretty good. We're 88% loaned by Tietto, 10% government, Côte d'Ivoire, 2% local partners. It really is a partnership with the government, and that they help us out a lot through the issues that we face. It's different to a lot of West African countries where you're left on your own. They really do provide support, both in security and also in infrastructure. We've got an excellent ore metallurgically. We get probably 70% of our ore out straight over gravity, and the rest comes out through the CIL. We haven't had a recovery below 94, even at really low head grades that we started off of less than 0.5. So, yeah, we're looking at a life of mine production target of 170,000 ounces a year till 2032, and we're pretty confident we can fill in that tail and extend it all the way out, into at least for another 5 years or so. We're looking at putting out guidance at the end of this quarter, as I mentioned. That's been our startup year, and just January numbers in there. As you can see, we were really mining limited at the start. All mining sort of matched, all milled. We had empty ROM pads. It was tough. Now we've really started getting in front. Our contractors really stepped up, and we're starting to really hit the grades and the tonnage rates through the mills that we knew we could from the start, but we were limited. Our outlook is looking pretty good for the rest of the year. We've got 7 production diggers on site. It's moving a lot of dirt. We've really outpaced, ore mining has outpaced milling for the first time, and we're starting to build stockpiles both on the ROM and lower grade stockpiles just off the ROM pad. This is our growth, and that's our resources to date. We've currently got 3.83 million ounces. That's going to be expanded again when we finish drilling out APG pit. But you can see it's been rapid growth, and most of that's due to our founder, Kagan Wang. We've got 6 of our own diamond drill rigs on site. Most of that's been done in diamond. We've got a little bit of RC in there, but it's an amazing effort, and a very good cost basis. We're drilling diamond at well less than sort of $60 a metre all in, and yeah, that's resulted in this great growth. It's also for Côte d'Ivoire, which is heavily forested and heavily cropped. Diamond drills have a much lower impact on the local community, so you can get in there and move these rigs about without dozing big trucks for an RC rig. That's our main shear at Abidjan. So if you can see that AG core section there, that's probably 85% of our current reserves. What we are drilling out now is the APG pit, and we'll continue to drill out all the little sort of pits along that shear as we move forward through this year. We started our drill rigs up again, so we're really primed into action. We sort of had a break after production started, and everything's up and running again now. That's what it looks like in our main core, and you can see there's a main structure there. You can also see a parallel structure to the north. We've got some interesting hits up there. That's all that dark blue line is our mining permit. So we've got some interesting ground there, and we're getting hits everywhere. We're really trying to do a really good target definition package this year, because it's easy just to go and put holes in. It's harder to actually find a mineable pit. So we're really looking to build our economic reserves inside our mining license. And to the south there, you'll see there's an extension of our exploration license, and you can see some of the good geochemical anomalies on there. We're really looking to expand in that direction primarily. There's some great looking deposits that we're pretty confident are going to turn into satellite pits in the near future. We've sort of got a $10 million US exploration budget for this year. About $5 million of that money will be spent in this exploration sort of area, sort of within trucking distance of Abidjan. And we're just finishing up our APG drill out now. We've got a potential for possibly a heap leach operation down there. We're going to see how it goes. At the gold prices that are currently, it might look to be a better option to expand our current milling circuit and truck it up the road. So this is our greenfields exploration, and I guess this is what the majority of you guys are interested in. That's all the permits we've got either under application or under, or we actually actively exploring in Côte d'Ivoire. So we've got Boonganoo project, which is probably our most advanced greenfields exploration program. We've had some pretty strong hits from the very limited amount of drilling we put into that to date. We're really ramping up drill rigs for that. I've got a little section on it later. We've got the Parla project, which is near the Endeavour's new Lafigi project. Yakro, Subra and Bundali in the north. It's actually 3 different ASX explorers that have got a Bundali project, so we might have to change that name. But it's, they're all around the same structure, and there's all some very prospective ground. So that's Boonganoo there. You know, we've got fully granted permits. You know, we're putting about 3,200 metres of test drilling in to try and define the mineralisation this 6 months, I'd say this half. We've got a whole recon and sort of target definition program planned as well. So, you know, and sort of a geochem sampling. Hopefully we can find the main structure and you know, and start our drilling program along that this year. So it's a pretty exciting prospect, and we're very pleased to actually start hitting it with diamond rigs proper this year. This is our other jurisdiction we're currently working in. I guess we've got Sestos to the north. Now Sestos is a very it borders on Iti mine, which is Endeavour's sort of I think 5 million ounce deposit that they're currently mining. We've had some very, very interesting geochem anomalies, especially in the sampling. We've you know plus sort of 1 kilogram a ton nickel, copper, cobalt, chromium, along with gold as well in there. So it's a mixed system, I guess. It's what we're seeing at the moment is similar to the original sort of geochem anomalies that were found in Julimar by Chalice. It's completely unexplored, and it's it's a great permit to be in. We've also got Bassa, which is heavily mined by artisanals at the moment. So there's obviously gold there. We're just going to do a proper geomag survey on it this year. Oh, sorry, I've got. That's our sort of strike range. You know, so 5 kilometres open that we're defining targets for over this quarter of work. We've got a big trenching program planned to try and test some of these anomalies. We've got a handheld XRF to see what's there, you know, just as we work. And we're really hoping that we find something that's mineable in this region and open up a whole new province in Liberia. We've got a government that's very friendly, very looking to attract investment, and it's a place we're interested to do business. It's an English-speaking country, so it's a bit of an anomaly in what's mostly Francophone West Africa, but it's certainly a good place to be at the moment, and it's very it likes to attract mining investment. Then we've got Bassa. You know, we've had some interesting hits there from trenching. We're certainly going to do a big geomagnetic survey. And apology, I'm also a process engineer. I don't speak geologist that well, but it's work that's ongoing, and we've got a nice mineralisation structure defined there. We've got a lot of artisanal gold miners in the area, mostly mining what we're seeing as artisanal wash that's coming down from that main structure, and we're pretty keen to define some targets this year and hopefully get a drilling program up and running by the end of the year to, you know, hopefully find a new resource there. That's Tietto Minerals. I've still got 2 minutes left, so I get a chocolate. So,
So there.
we're actually the last bit. Thanks very much.
I don't know about that because I only have 2 left, Matthew Wilcox.
Sorry?
Okay,
Wasn't
all right,
fast
you
enough.
go. You did very well for a virgin. I'm very impressed. Congratulations to you. We'll have you back again.
Thanks, guys.
That was great. All right, team. Next up, we're going from explorer to producer at Bellevue Gold. They had a gold bar which was refined October last year. What did you do? 8.3? He's too easy. Bloke. I'm sorry. Blokes can do one thing at a time very, very well. I shouldn't have done that to you, should I? It's true. All right. So you had a gold bar. Last year you produced ABC, who started this session off, correct? What did it weigh? Do you remember what it weighed?
What we weigh, what ours weigh?
Not you particular, I reckon about 85 kilos. But what does your gold bar weigh? I haven't got a lot of time here and I'm using your time.
It was under 10 kilos, so not quite the $1.4 million that they had.
It's impressive though, isn't it? It's really impressive. So you've got a market cap of 2 billion. I just want to point that out to everyone. So lots to get excited about. And we're interested to hear where you're going to go to from there. First gold pour, what's next? Would you please make him welcome everyone? We're talking Bellevue Gold.
Well, thank you very much. Very kind introduction, and I do note that I came on early and Chrissy doesn't have any chocolates left, so I might run a couple of minutes over to get you back on track, Chrissy, to do you a favour. But look, thanks very much for the opportunity to present at RIU. Look, it's always an important conference for us at Bellevue. We were lucky enough to be awarded the Oliver Award a couple of years ago for the discovery of Bellevue. So, it's quite a pleasure for us to come back and talk about actually developing the project and getting into production. I will try and make sure I talk about geology and exploration as a part of this, but I will talk at the start about the ramp up and the start of production, because that's the life that we've been in the trenches living for the last couple of years. So look, as Chrissy said, we're a new producer. We put our first gold in October last year. We're able to build the mine with the budget that we had, on time, on budget, in a pretty difficult mining environment. It's a credit to the team that we have on site, a credit to the contractors that we have to be able to deliver a project and move through into cash flow, which is a very exciting place to be. It's all about the underground mining where we are now. So, now that we've got the place built, it's all about getting that underground mine up to run rate. So, that's through the development rates, which we're already getting. We're increasing our stoping rates now month in, month out, and that's what delivers the high grade to the processing plant. We've done a hell of a lot of underground drilling to de-risk that mine plan. It's probably been at the expense of lots of exploration over the past 2 years, but we thought it was very, very important to de-risk that startup plan and make sure that we had the drill density across the early years of our mine life. We've completed 160,000 metres of grade control drilling in the last 18 months to essentially drill the project out to 20 by 10. It gives us a really good base to start on, gives us a 10-year mine life to start, but we also have a great platform for growth, and I think that's something that we can really focus on now that we've moved through that developer stage and are into cash flow. This is through optimising the mine, driving productivity, driving production, but also investing more through the drill bit, doing more exploration outside of the resources that we know, growing the resource and growing the reserve. All the while we've done this, we focused on having tier 1 ESG credentials, which I'll talk a bit about towards the end of the proso. Look, these graphs are pretty important to us. There's a new out today just to show that we're doing what we said we're going to do. There's no magic formula in mining, certainly no magic formula at Bellevue. It's just about keeping the processing plant running and then delivering the high-grade ore to the plant. These graphs on the right-hand side here, these 4, cover that first part. So, the mill's turning, we're getting the throughput through. We've done that month in, month out now, and we're going to continue to do that, every month going forward. And then on the left-hand side, what you can see is that as the stope tons increase, the gold produced increase, because that's our high grade that we're bringing to the mill, and that'll continue to increase month in, month out as we go towards the end of this financial year. We just released our guidance for the half of 75 to 85,000 ounces. As I said, we're achieving our run rate from the plant. The underground mining is going really well. We have a high quality underground contractor in Develop doing the work there. We're opening up multiple mining areas, which I'll show you in 3D in a little bit. And importantly, we've done it with a bit of fat at the bottom of our balance sheet, and we're now in a position where we're generating positive free cash flow, which is a big achievement for the team. Now, the mine itself, it's a mine that has been known about for a long time. There was a modern underground mine there back in the late 80s to late 90s. The discovery hole for the new Bellevue was in the end of 2017. So it went from discovery through to production in under 6 years, which is, I guess, a reflection of the quality of the ore body. And what we have is not just one lode that's we're chasing down to the centre of the earth. We're actually chasing multiple lodes all at the same time. And what you can sort of see here is that we're getting similar grades, similar tenors, similar widths in all of the sort of key mining areas that we're developing out to. So when we've got all of these areas in production, which we're pretty close to being on multiple levels in each of these areas, you'll see we can deliver that ore to the mill. Now, after the drilling comes the development. What we're seeing is excellent reconciliation between the grade control drilling and the face sampling that we're doing, and I guess that's the power of having the grade control drilling done to that 20 by 10 metre spacing at least, is that we understand where the ore body is, and we can essentially put ore drives on survey control and be able to chase down and get those good grades and good widths. And the other thing about Bellevue that you'll notice from these pictures is that we have fantastic ground conditions. So the ground there is very hard, very competent, but very good for mining, just bolts and mesh as the ground support, and that translates over to the stoping as well. So what you can see is we put sort of 4 separate stopes down the bottom there. 3 out of the 4 of them are from the top level. When you're sub-level open stoping top down, you start at the top edge of the ore body and then you work your way to the middle. When you're mining your top, you're mining your stopes blind, so it is actually more difficult to get your compliance there, and we've been able to get good compliance with plan on that top level, and then as we're mining just in between the levels, you can see that one there, we're actually getting good recovery of the ore body and achieving those mining parameters pretty well. And as I said, as we get in now, the stoping, we've done almost 30 stopes completed on site at the moment. A lot of that was in the Upper Armand area. Over the next quarter, we'll be mining productively from all 5 different mining areas. So Upper Armand, Lower Armand, Marceline, Bellevue South and Deakin, which is a very high grade part of the ore body, which is great. But, it is a geology conference, so I do want to speak a bit about the history of Bellevue and the growth that we have ahead of us. We're in a pretty prolific region of Western Australia. I'll just show you on this picture here. We're in the northern goldfields of Western Australia in the Agnew-Wiluna greenstone belt. So it's a north-south trending greenstone belt. And importantly, we've got other significant gold deposits on that belt. So you've got your Jundees and Wilunas to the north, your Agnews, your Darlows to the south. You've got Gwalia down here. You've got Bronzewing in the region as well. These are 5 to 10 million ounce gold systems. What it shows you, if you've got the right geological setting with the crustal scale mantle tapping structures to provide these big deposits. The difference between Bellevue and these other deposits is that they've been being consistently mined for the past 25 years, and Bellevue's laid there untouched, and we're just getting into it now. Zooming in on our mining tenement, the original Bellevue mine that I said was mined in the 80s and 90s was just one lode sort of through the middle of the tenement there, and they pulled 800,000 ounces out at 13 grams per tonne. What we have discovered since then is north and south extensions to that original Bellevue lode, hanging wall and footwall structures that weren't discovered before, and then linking structures in between. So, over 3 million ounces of resource there, which gives you great confidence in going underground. Now we'll have a look at that from the underground perspective here. If you do spin that around, you can see those multiple lodes, over almost 3 kilometre strike there. And where that shows you is that you're not just chasing one skinny ore body to the middle of the earth. You actually have all of these different areas that you can go. I'll show you those structures again. You've got Tribune hanging wall structure, south and north extensions of Bellevue, which was mined out here, Viago, which links, and then this Deakin structure, which is about 1.4 million ounces, which is a virgin lode that sits in the footwall there that we're just getting into now. It's extensively drilled, so extensively drilled from surface, lots of grade control from underground now, a lot of drilling within that mine corridor that you can see, not a lot of drilling outside of that mine corridor, and I guess that's the platform that we can start to attack this ore body from now that we're underground, now that we have these work areas and the jumbos are getting ahead of the capital development there. And one of the sort of key ingredients for discovery at Bellevue over the years has been downhole EM. It's a high pyrrhotite ore body. There's a 1-to-1 association between pyrrhotite and gold at Bellevue, and as we know, pyrrhotite's quite magnetic. So When you do put the downhole EM down there, you do get vectors that you can drill, and that has been how all of these blind structures have been discovered to date. We have untested downhole EM at Bellevue in the right areas. We just needed the right platforms to drill, particularly on the southern end of the ore body. I'll sort of focus in when I'm talking about that downhole EM. You can see here in the 3D that the yellow areas are those downhole EM plates that you can target. If I focus in an area to the south, we've got a blue structure which goes through here. Let's move that up a bit. Called the Counsel fault. This Counsel fault pushes the ore body down about 120 metres. Behind here, we've got Bellevue South, which sort of sits in the middle. Behind there, we have this large Deacon, which sits about 400 metres in the footwall to Bellevue South. We've defined Bellevue South extensions on the other side of this Counsel fault, again on that offset, for about 300 to 400 metres. If you look hundreds of metres of down dip, we've got untested downhole EM that we just simply don't have a platform to drill, which we'll be able to drill out from underground. The same thing with Deacon. You've got that same offset and a big downhole EM target down there that has, again, never been drilled because of drill platforms from surface, but that's something that we can drill out from underground, and we'll be doing as soon as we get the right platforms for it. Going back to 2D, this sort of shows that structure. You can see that southerly plunge of the ore body. We're south to the right there, and that's that Deacon downhole EM, and then some of these Bellevue downhole EMs there that we haven't been able to drill, and we will be able to get down and do. And the other side of growth where we are is actually, when you look into the page, based on that last one, is that you've got your hanging wall structure at Tribune, you've got Bellevue, you've got Deacon, you've got connecting structures at Viago. Repeats of those structures is something that has been identified through downhole EM. There's been limited drilling to follow that up, but for example, the repeat target under Deacon that was drilled with a 1.2 kilometre drill hole that was co-funded through the EIS scheme, hit a couple of metres at 10 grams. Hit Bellevue rocks down there. You're obviously unable to follow that up as a developer or exploration company. We're going to have a decline here pretty soon that we can drill 300 to 400 metre holes and be able to target that. From a mining perspective, you can see that we're building these platforms to be able to drill from. These are the structures that we're getting out to. I'll put Deacon on the right hand side here, and you can see that you're getting multiple. Whoops, next one. But as we develop the ore body and develop new areas, we're mining out to Deacon, and it's giving us multiple platforms across that Deacon structure that we can drill out and target into to look for those repeat structures there. The power that we've got now is a really good base to start. We've got multiple mining areas that will continue to provide for years to come. We've got a fully designed 10-year mine life that's sitting there ready for us to go that we can optimise off, and that'll be and that's a really good place to start, but again, it's not where we'll finish because these lodes do continue at depth across the region, and we believe at Bellevue. The plant that we've built, it's currently achieving the 1 million tonne per annum run rate. We have run it at times at a circa 1.2 million tonne per annum run rate. Obviously, the mill is outstripping the mine at the moment, but when we get the mine into the new mining areas and get that efficiency up, we'll be able to push the millies, they'll push the mill, and the battle will continue between the miners and the millies to keep going on and keep getting that growth. We did it on purpose to set that infrastructure up so that we can grow off the same footprint for very low capital. Speaking of the capital that we did in the ESG, we've been an industry leader in a lot of areas as we built this mine. It's something that we've been really focused on and we're very proud of. We're building what's actually going to be the largest off-grid hybrid power station, so with wind, solar, thermal and batteries, which is currently under construction, as you can see there. And we've got sector-leading diversity as well, with over 40% female in our workforce, and we'll be net zero by 2026, which is also ahead. So look, as you see there, Chrissy's coming over. She's going to deny me the I'm going to purposely go over because I don't want the chocolate. There you go. But look, we're set up with a great platform. Very proud to have have brought the Bellevue project into production in a pretty difficult environment, and it's just starting now. We're ready to start growing it. Thank you.
Mr. Ruzicka, would you like to come here? It appears that I have one chocolate left for this session, which is very nice of Darren not to be motivated by food or chocolate on the day of love, which is worrying. All right, Ramelius is our last company in this power session. They've been great supporters of us here at RIU Explorers, and great to see you up here rounding out this session. I'm going to whet your appetite once again. A $2 billion market cap. Take it away, sir. Would you please make him very welcome, everyone? The fabulous Peter Ruzicka.
Thank you, and I'll do my best to earn the chocolate. For those of you who know Ramelius, we operate 2 production centres or processing hubs at Mount Magnet and Edna May, shown on the figure there. These are fed from a number of local and satellite open pit and underground mines. The company holds a mineral resource inventory of 7.6 million ounces, a mineral reserve of 930,000 ounces, with production guidance 265 to 280,000 ounces for FY24. The exploration focus is on feeding and sustaining our existing hubs, advancing our development project at Rebecca Row, and identifying and progressing new greenfields opportunities. Ramelius has a long history of growth through both acquisition and exploration. 7 acquisitions in 6 years and 2 in the last year, those being Breaker and Musgrave Minerals. And I'll take this opportunity to acknowledge the technical work of both those teams. As a geologist, we do indeed stand on the shoulders of those before us. Mount Magnet. Mount Magnet is a mature camp, and mature certainly doesn't mean unprospective. It has a long history of production, but still remains the cornerstone of Ramelius growth. The project is well positioned for sustained production, with a mineral resource of 3.1 million ounces and a mineral reserve of 570,000 ounces, and multiple exploration targets for future growth. The next generation of discovery at Mount Magnet is likely to come at depth, and I'll talk about some of the opportunities that we're seeing. You can't talk about Mount Magnet without mentioning Hill 50. The iconic mine was exploited to a depth of 1.5 kilometres and produced more than 2 million ounces of gold. High-grade mineralisation continues at depth in BIF-hosted chutes. The adjacent Galaxy underground mine shows the same BIF geology, and that system also continues at depth. And I'll just point out on that slide on the right there, a deep BIF breccia hosted result, 72.9 metres at 1.84, including 25 metres at 3.83, sitting well below our current mine design. Hesperus prospect sits immediately south of Galaxy and Hill 50, shows the same interaction of BIF stratigraphy with cross-cutting structure. The blue coloured shading in the plan in the middle there represents BIF, and you can see the interpreted structure and plan disrupting the geology in the area of the historic Hesperus pit in the middle there. Recent drilling has intersected high-grade BIF-hosted mineralisation below a porphyry intrusive, and results there include 11 metres at 55, 1.7 at 78, and 1.9 at 9.05. Granodiorite hosted stockwork deposits are the second major style of mineralisation at Mount Magnet. The best examples of these are recent discoveries at Eridanus and Bartus East, shown here respectively. What I wanted to point out here specifically is that these stockwork zones can host high-grade underground targets. We've seen this at Bartus East on the right. If you look at the long section there, you'll see the high-grade pink area at the base of that model. Results there include 60 metres at 7.82, 45.6 metres at 10.4. And there are deeper results at Eridanus, which could suggest the same. Right at the bottom there of that Eridanus section, you'll see 45 metres at 3.23. And just to further support the concept of high-grade targets within these granodiorite-hosted stockworks, these are some recent drilling results from the base of the Eridanus pit. They define a shallowly dipping high-grade zone with good continuity. Best of those results, 13 metres at 10.4, 12 metres at 12.8, and 10 metres at 18.1. How many more of these are there at depth? I think already the data suggests that there are multiple. And the next question after that, how many more granodiorite-hosted stockwork zones are there out there within the Bugatti Dome area? To answer that question, we've been looking at techniques to help identify granodiorite intrusions at depth. We've used passive seismic ambient noise tomography to identify the larger intrusive complexes and targeted the margins of these for potential mineralised dikes. The plan here shows drilling around a couple of identified areas to the southeast of Bartus in the northwest corner there. Red outlines on that figure, or the purple outlines, depending on your site, represent interpreted intrusive complexes at depth based on the passive seismic work. Results from that southern target there, target 5-6, show a broad interval of low-grade mineralisation hosted by granodiorite. And just based on a couple of holes there, 43 metres at 0.49, hole to the south there, 9 metres at 1.685 at 2.47. These are the first deep holes into some of these targets. So plenty of space. The Q Gold project, Ramelius acquired Musgrave Minerals in the Q Gold project in October 2023. Magnet, the blue package in the middle there, and the Q resource area, just labelled as the Q, oh, no, sorry, go back. So that's the QJV there, the Q Gold project, Mount Magnet in here. So Q project, just 40 kilometres north of Magnet. It's a natural feed source for the Mount Magnet mill. Project holds a mineral resource of 927,000 ounces, including the high-grade Break of Day resource, which comprises 982,000 tonnes at 10.4 grams per tonne gold, 327,000 ounces. The PFS work reported by Musgrave indicates a robust project recovering 337,000 ounces from a 5-year LOM, with upside from high-grade extensions and multiple exploration opportunities. This figure summarises the project pipeline at Q. Looks a bit busy, but bear with me. The PFS open cut projects shown in the dark outline. So from the top, Lena, Break of Day, White Heat, Leviticus, Big Sky and Numbers. Advanced drill targets with resource potential shown in the yellow outlines at Waratah and Amarillo, and the more early stage targets are shown with the red outlines. Lena West up the top, Break of Day North, Eclipse, and then down the bottom there, the Numbers series of targets. There are well-defined exploration models here at Moiji comprising the interaction of favourable stratigraphic packages with cross-cutting structure. And that model has implications for target generation moving forward. Break of Day is one of those spectacular high-grade deposits that captures the imagination of geologists. Cross-cutting mineralised lodes hosted by a prospective foliite, the starlight basalt there on the plan view. It just happens to have the perfect chemistry and rheology for brittle ductile tensional veins. Plan view there shows the geometry of the lodes, a number of different lodes, and the adjacent cross-section shows some of the grade control drilling results from the Starlight lode reported by Musgrave. Just reading from the top of that cross-section, 12 metres at 19.5, 10 metres at 42.5, 17 metres at 35.7, 6 metres at 32.3, and I missed a couple of the lower grade ones. So you really couldn't ask for a better demonstration of high-grade continuity. That's just on this section. There's obvious underground potential here. These lodes are still open at depth, and there's potential for other blind lodes that don't have a surface expression. And from one high-grade deposit to another, the Penny Gold Project has a high-grade mineral resource of 440,000 tonnes at 22 grams per tonne gold in two lodes, Penny North and Penny West. The plan and oblique view figures here highlight the Penny lode geometry and its relationship to a host granodiorite unit. That's the Penny North lode. This is the Penny West lode. This pink unit through here is the granodiorite. And I just wanted to highlight that because that's a critical part of our model. Essentially, the lodes form a stepped or on echelon geometry, transgressing stratigraphy at the lode scale, but at the system scale, there's a very strong spatial association with the granodiorite. Granodiorite unit continues to the northwest and at depth, and the geometry is favourable for another stepped lode repetition at depth. In a bit more detail, that northwest position is supported by some previous drill indications showing quartz sulfide veining and brecciation with some subeconomic grade, and a downhole EM survey in 2022 identified an off-hole conductor in the vicinity. Figure also shows the drill traces, indicating that drill spacing does open up at depth with room for another lode. Ruzicka was an early 2022 acquisition. Bombora was acquired in May 2023. They sit just 50 kilometres apart on the plan there. So Ruzicka up here, Lake Road down here. Together, combined mineral resource, 65 million tonnes at 1.5 grams per tonne, 3.1 million ounces. Resource drilling is ongoing with the aim of a pre-feas study by mid-year. Ramelius holds a very large ground package in this region, along regionally prospective structure with good greenfields potential. Key structures shown there include the Laverton tectonic zone on the right, Sunrise up the top there, and other major deposits. The Keith Kilkenny tectonic zone on the left there. But this is Bombora at Lake Roe, an area of complex lode geometry hosted by a quartz dolerite. The oblique long section at the top shows some of the lode geometry. South plunging lodes towards the south there, Chura lode, north plunging lodes at the north there. Diamond drilling is targeting resource definition of the higher grade lodes at depth, and recent results from the southern Chura lode shown in cross section and long section here. Those recent results include 4.5 metres at 18.7, 4.2 metres at 11.1. I'll skip to my summary. To summarise, Ramelius has a well-funded exploration resource definition budget, 30 million, with the exploration focus clearly on the Mount Magnet region, where some of our best targets lie, including the new Q acquisition. We're advancing the Rebecca Row development project and exploring opportunities in highly prospective tenement packages along key structural trends. In short, we continue to evaluate and progress exploration opportunity. Thank you. Thank you.
That was very, very impressive. All right, team, we've got a break for a short period of time. If you aren't coming back into the room, remember we have drinks at the conclusion of today. So it's 6 o'clock out near the bar. Remember to put your name down for those boots that I think it's number 49 by